Guys, so we are going to get into an indicator lesson. Now, I've talked about this one before, which is the RSI, and I mostly talked about it with using it as a indication that it may be time to get out of your trade, or this could be a good time to get in your trade. It can also be used as an indicator for when they just have stock pulls back and you've been waiting for some sort of indication that, hey, this may be a good time to buy a few more shares. Maybe it hits like a heavy supply zone, a heavy demand zone. It may be hitting a support or resistance. However it is that you're looking at your charts, or whether you're looking to trade it or you're looking to buy shares and sort of average down, the RSI could be one of those things on top of a few other indicators that you can use to let you know that this thing is probably going to be coming back down, or we can probably expect the price to start pushing back up. First, what is the RSI? RSI simply stands for Relative Strength Index, or you may hear it as Relative Strength Indicator, either or, but that's just simply what it stands for. But what does it mean exactly? It is a overbought and oversold indicator, letting you know that when a stock rallies, let's just say this thing goes from $100 to $150, and the RSI is sitting at 80. This is just basically saying that this thing is extremely overbought. That means that it is likely to correct or come back down to a fair value, to where it's either neutral, or we may get back even lower to where it becomes oversold. And that's the next thing. The oversold part is the stock, let's say it crashed, or let's just say it got a major correction, and this thing is sitting at like 20. Okay, we're at 20. That means that this thing is so extremely oversold that we can probably at some point begin to expect another rally, or for the price to start kicking back up to also find its fair value. But then let's also look at that midpoint around 50 on an RSI. Don't worry, we're going to get into the numbers. It's like a neutral zone. This could also act as somewhat of a reversal zone, or it can just say right now the price is kind of neutral, and you can make a move there, or you could have let it get above that, below it, let it get back to those lower 20s or 30s, higher 70s, and that'll lead into exactly what the numbers mean. And the third thing would be those numbers. You will see anything like a 20, 30, you'll see 50, you'll see 70, 80. These are the numbers that are on the RSI scale. When a price is, let's just say it's sitting at 30 and below, this thing is extremely oversold. But if it's sitting at 70 and above, it's extremely overbought. And that middle zone, that 50, I like to look at that as a neutral zone, potential reversal zone. So when the RSI is getting there, there's a possibility that the stock could come back down if it doesn't get over 50, or if it breaks over 50, that means that the continuation of the price going up can continue. And we're going to look at exactly what happened when the RSI got to a certain point, when it was at 50, when it got to 70, when it was at 20, 30. Let's look at what happened every single time the price point got there, and potentially how long it took for this thing to go in whatever direction we may be anticipating. Now, before we start, let me say this. You never know how long a stock will remain oversold or overbought or at that mid-level. We just, of course, have to react to what we're seeing on the charts and just kind of go along from there. But sometimes, just because something is overbought doesn't mean we're about to get a full correction or the price is going to come down immediately. It could take a little bit of time. And also, it depends on what time frame that you're looking at for how long this thing could stay in a certain spot, how long it could be before it comes back down or go up. There will be other factors that you would need to kind of consider when you're making your decision. Okay, so we're going to start with Apple. Now, right now, Apple has been kind of ranging, right, between this $275.99 and around this $280. So as of right now, I'm on the 1 hour time frame. So you'll notice once we got back below that, we pushed up, came back right around December 5th. Okay, so all of this here is like we've just been kind of ranging in between. Now, what is something that you notice here? The RSI is down at the bottom, but before we look at that really quickly, let's look at adding your indicator to your chart. Now, it usually depends on what platform that you're using. In this case, we're looking at TradingView. So you will simply come to the top and you'll look for either the word indicators or look for this little thing with the charts and the little line above it. And it will open up the indicator section for you to be able to type it in, okay? So you can either type in RSI and it will pop up here, or you can type in relative strength index, all right? And you will click that and it will add it to your charts, all right? Now, it is currently sitting at 51 on the charts. Now, this little yellow line here is my smoothing line, and it kind of also acts as like a moving average as well. And it's something that I also look at when you're looking for things like crosses between that RSI line and that smoothing line, but we'll get to that part. We're going to kind of get to it step by step, okay? So first thing is this. You notice that I'm going to come over some here, and you guys see where we went from this 275. By the way, keep your eye on that 275 level on Apple. We'll talk about it later. But 275, and you see we had this nice little run up here to right around this area here first time, which was 287.40. Got some rejection, pushed back down, but then we hit this highest point at 288.70. 61. Okay, and what do you notice about this little run up here? We went from, we're going to come over here and we're going to get a vertical line, and we're going to start here right around when it hit that 275, and we're going to put another vertical line right here when it hit that highest point here. Okay, now when we went from here and we come down, the RSI was sitting at about 53. This is a more neutral zone versus a oversold completely or overbought. Still in that neutral area. And you notice here, we're kind of in that same little neutral area. Look at this here. We're sitting at about 50 right now from this little piece here. It's been just trending along that 40, high 40s and that 50, right? Kind of had that same thing here right up in this area, and then we finally start to see a run up. Now, when we got up here to 288 at this little high point here, the RSI was pushed up all the way to get exact at about 78.32, indicating that this thing was extremely overbought and we can probably expect some downside. Now, you may be asking, okay, do I just hop in just because it's in that 78? Because it's in that 80, whatever it may be sitting at? No, you use other things on your charts to kind of give you a little bit of indication that, hey, we may be hitting a ceiling now. And by ceiling, it could be a resistance. This is something that you can add and pair with your RSI to let you know, hey, if we can't break over this level, we may be coming back down. And the RSI sitting at 78 could tell me that hitting up there at that ceiling could mean we will come back down, and I could potentially get into a put and ride this thing down to either another level of support or whatever target that you may have in mind. So when you're finding those levels of resistance at the top, whereas if you are noticing that the RSI is pushing up to a very high number, past 60, it's hit 70, 75, it's getting up to 80, it's just getting carried away, you can begin to look to the left of your charts. Now, sometimes you have to also remember that some stocks are making new highs as well. So it may not be a whole lot at the top for you to go by. And so the main thing you kind of want to look for is some major rejection at a certain price point. But don't jump in just yet, especially if you're working with a stock that has all new highs, because you have no data at the top to go by to let you know where that next resistance is. And in Apple's case, at that 288, we're going to move this over. You'll notice that we had a nice little rejection right up in here when it hit. Now we had some here, but you can see that we kind of pushed back up and we had a little bit more there. Me personally, I probably wouldn't have jumped in just yet because of this, but there's also a little something else here where I say pair multiple things to kind of give you some indication. This here is somewhat what you would look at as a tweezer top. And a tweezer top is a bearish signal. It's where the open and the close of a particular the two candles are in the exact same spot. And you notice right here what is tweezer happened. What are we seeing here? right up in this area. It's aligning where this major rejection took place, and the seller stepped in and knocked this thing down. And even though they pushed it up a little bit higher, just about $1 more, we still got ourselves a tweezer here on this hourly time frame, and this thing poured down. I personally would have wanted to see us get back below where we saw this major rejection happen here, to be more confident that they are going to continue to bring the price down on the stock. Here's another thing that I would have looked at to kind of give me a little bit more confidence in making a move. You see here where we got this cross on this smoothing line and this RSI, which also acts as like a moving average. When we got this cross here and this thing came back down, you notice up in here as the price was pushing up, it floated up and our smoothing line is here. But then finally, right around this area where we got this major rejection here, it began to cross. Then we got this candle here. Now keep in mind, my tan candles are acting as my red candles or my bearish candles, okay? We got this here, got that little tweezer there to kind of go by from this older rejection here. We got this cross, and look what happened. This thing begins to pour down. That right there is pairing a number of factors with your RSI so that you are able to kind of go into it with a little bit more confidence to where the price is going, or if this thing is ready to start coming off those highs that it just recently pushed up. So Apple was the perfect example for this, especially with how this thing made this very nice move. If you were able to catch that move, it was definitely a great one. And that's why I said keep your eye on 275, because 275.99 is the level that this thing holds up. We can begin to kind of see another upside move long term. So I wanted to put that out there again. So that is just one way for you to be able to use your RSI, to where you are just simply looking for this thing to become overbought or oversold, to let you know that the price is burnt out on its rally and it could be coming back down soon, or they've pushed this thing down enough, the bulls have had enough, and they said, we ready to drive this thing up. We gave the bears their opportunity. Now let's start pushing the price back up. And so the exact same way I just explained this going up, it's the exact same way if the price is all the way down in its 20s and its 30s, it is extremely oversold, and we can begin the price to start pushing back up. Now, just always keep in mind, like I said, we don't know how long it's going to stay there. But you can always use the data to the left to kind of let you know what levels are the heaviest. Where's the heaviest supply and demand zone, to where if it is sitting at 30, and if the price is getting back to a very, very heavy level at the bottom, there's a high chance that they're going to be ready to start pushing the price back up once it hits that particular level. And from what I'm seeing, that particular level is around that 275 area, to where they can step in and we can start to push Apple back up. Considering if we do get there, that RSI start pushing a little bit lower to those 40s, those high 30s, then it could be a go. And just as I said in one of my older videos, you can use this as another indication on getting in and out. If you got in your trade when the RSI was sitting at 30 and you had a nice run up to the upside, and now it's hitting 60, it's hitting 70, it may be time to come out of your trade, because there's a possibility it's getting somewhere to where they're going to start knocking the price back down, and it's at 70, completely overbought. Then you want to go ahead and either start taking a little bit of profit or close your trade potentially, so that you're not caught in any reversal, vice versa. So calls or puts, however you're trading, that could be an indication to get in or to get out. I hope this helped with getting a better understanding of what the RSI is. It's just an overbought and oversold indicator. And once it gets to about 70 and above, this thing is starting to become completely overbought. And once it started getting to like 30 and below, it's becoming oversold. And that 50 middle area will act as more of a common ground and a neutral zone for the price point that the stock is currently at. And you can kind of watch that to see if it breaks above or below it, to give you a little bit more confidence that the RSI could either start pushing up a little higher or pushing low. Then you can also use your smoothing line here, where it kind of has the like a moving average there for you, as well as that RSI. So you can look for crosses you can see how they're kind of interacting with each other and how they're moving. If you've ever traded with your EMAs to where you're looking for a cross between the 9 and 20 or the 50 and the 200, you can use your RSI in this moving average the exact same way. And the perfect example is pretty much what I just showed you guys. When this here, we got that cross in that RSI and this thing came down, just additional confirmation. So the more confirmation you have, the better the indicator to use to aid you in your trades. And with that, I will see you guys in the next one.